to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your Stockminer Brian Johnson, and here we go, kiddos. All right, let's catch you up. We have had, I don't know, bit of a down, bit of an up. Really haven't moved a whole lot in the last couple days. Here's something I want you to take note of. Notice how nicely this inverse head and shoulders is setting up. Isn't it pretty? Yes, this might be called a double shoulder. I mean, this is a potential break and then a fail of it or whatever, but the point is it's still intact. I'm still going to give it to the bulls. We can run this thing diagonal, whatever. I'm just going to give you a ballpark idea of what this is. It's a pretty clean, pretty clear. This even had kind of a double left shoulder. You get the big head, get kind of a double right shoulder. It's really a very, very nice looking pattern right now. So from a hey, you should print this out and keep it whatever illustration, if you guys do that, this is the one to do it. This is a really, really good picture of that. So what do we have? A bigger picture. Consolidation. Here we go. Into last week, we come up into 12.6, 12.4, 12.6, 12.4, 12.6, 12.4? I don't know. What happens in these consolidations, and I want you guys to be very careful of this. Here we have a big inverse head and shoulders, right? Well, guess what? With the consolidation sideways, here we have a smaller head and shoulders. So it's really 6 1/2 dozen of another. So don't miss the forest through the trees. When you get any kind of a consolidation that moves sideways like this, you are going to get inverse head and shoulders patterns all over the place. Don't miss either one of them. Are they legit? Not until they're broke, but sure, you can follow them if you want to. So the big one, inverse head and shoulders. The small one, head and shoulders, waiting for a break one way or the other. It's 12.4, 12.6, period. It really doesn't get much more simple than that. Now, the Dow ran a little bit more today. It was a little bit ahead of the rest of the markets by just a little bit. But as it turns out, they all ended up pretty close to this overhead resistance areas on each of their respective charts. So we're going to continue to just follow what we've been following now for the last few days. 12.4, 12.6, those are your breaks. Those are the things to look for on the Dow. Notice here on the daily, also a very nice head and shoulders type look. This tail kind of gets in the way. It's a little bit funky, but hey, whatever. This was on the big gap, you know. Hey, Spain's getting a bailout that nobody cared about once the markets open. But it still leads for and lends itself to some sort of an inverse head and shoulders pattern. We have major economic data coming out tomorrow. Something to also keep your eye on in a big way coming into tomorrow morning. We have PPI numbers, and then we have, what's the other one? Retail sales. Retail sales, yep. And they come out before the market opens. So those numbers are going to come out, the market's going to do whatever they're going to do, and it could affect the markets one way or the other. You just never know, but that's something to watch. Now, after the market opens, a half an hour into it, we have business inventories that are released. That's not as important as the two numbers before it. So the more important numbers to watch all week long, to be quite honest, are the pre-market numbers. So we have producer price index tomorrow, followed by Thursday's consumer price index, the PPI, followed by the CPI, and then of course some other stuff thrown in there. Those might be the market movers this week. Keep in mind we're in options expiration week. If you follow me for any length of time, you know how I am about the extra volatility added to this week. We also have futures. If you trade futures contracts expire this week as well. So we have quite a bit of stuff kind of expiring all at the end of the week, and that always adds to the extra volatility. Now, on the breaks, if we get this inverse head and shoulders, the target on this thing is like way up in this area. So any potential major break to the upside, and it could be game on for the bulls. So I want to bring that to your attention. If we float back down, you'll want to watch this lower 200. That'll be the more major area to watch on all of the charts going forward. So as a whole, all of them are setting up inverse head and shoulders. They all have the kind of head and shoulders, smaller ones on the 60-minute. That's the theme of the video today. Now we can blow through the rest. Here's the NDX, left shoulder, head, right shoulder, waiting for the break. You're looking for pushes up and above this area before you get into it. Apple looks good right now, so if Apple decides to go, the NASDAQ will go with it, and you should see some very nice movement to the NDX, and I love to trade the NASDAQ long. When it goes, it usually really giddy ups. and it can run and run and run, and it'll typically end up much stronger than the rest of the indices by the time we're done. Did not today. The Dow was the strongest, but when these things get going, a lot of investors love to pour into the tech stocks, and that'll drive this NASDAQ up. That's the one to watch to the long side. Play the QQQ. I know that's a real popular option for a lot of you, so go ahead and play that one. NDX inverse here. This one's been a little bit more choppy. You can kind of see the sideways sloppiness that we've seen. It's, pretty clear on all of the charts, to be quite honest. But on the NASDAQ in particular, after that huge down day that it had, it really got slaughtered this day after the Spain bailout. It was really Sunday into Monday is when it happened. Just a huge pullback here. But overall, still sideways and has not broke the inverse head and shoulders look that it is also putting in on the daily. Here's the weekly for the NASDAQ, and so far we haven't really gone anywhere. We are down 0.5%, so keep that in mind. As of right now, we're down. If we continue to push our way up, it's this bigger number of the 20-week moving average that the bulls are eyeing. That's what they want to get back to, and this is where the bears really want to try to make their stand if it gets back into this area. So for some reason we have a heavy run over the next couple days before my Thursday video. This is the number to be watching very closely in the bigger picture. SPX, head and shoulders, inverse head and shoulders. Here's the head and shoulders pattern. Where we go, I don't know. You're looking for here and you're looking for here. I can draw two lines, make it very, very simple for you. You just want to wait for the move one way or the other. If you choose to play this, fine if you're a day trader, but I'm going to tell you, as a general rule, this kind of stuff right here is going to kill you. So this is the type of stuff you want to stay out of. Ignore the chop. Be very careful around it. It's better to just sit on your hands and wait. All right? So from a trading standpoint, be very cautious in times like this. Just wait for the break, take your move, and be done with it. We should get a pretty, numbers could be really good, numbers could be really bad. We could see major moves one way or the other tomorrow based on the numbers. I don't know. I'm just telling you, just wait for the break. And then take your move from there. SPX daily, same thing. Here's that move here, waiting here. Really looking to see if this thing pushes higher, if the bulls get this thing going. Watching closely the 50-day moving average. I know that's back there a ways. Still a good 30 points from where we're at, but we get major good news and, oh, hey, Chicken Little, the sky isn't falling type stuff, then this 50-day will be hit tomorrow. I mean, we could really see this stuff run and run hard, at least get close to it within a day or so. It doesn't take long when the markets are really happy about stuff. That's why I'm curious about these numbers. Watch those numbers very carefully in the morning. But as a whole, the markets all look kind of the same, putting in the same type of patterns. Bigger picture is we're just consolidating sideways and we're all just waiting for the break. VIX daily still back above 20. There's still very good fear in the markets. Now, by the end of the week, I'm real curious to see if that changes. If we get these good numbers and the market blasts higher and this inverse head and shoulders is legit, guess what? This VIX is going to plummet. All right, we're going to see a major drop in the VIX. In that case, would not be surprised to see us back in the 16 to 18 range by the end of the week on the VIX as the fear comes out of the market, complacency comes pouring back in. But as it is, look at this. Okay, we've been back above this 20 area on the VIX for 4 or 5 weeks now. We did manage to close above it yet again last week. So it's anybody's call. It's anybody's call. So right now, there's still more fear in the markets. However, we'll see if we can push up and through. If we break that inverse head and shoulders look, I really think that's the clue for the VIX to plummet at that point. And that's exactly what we should see, and that's why you look at both the markets and the VIX to see if one confirms the other. FAS, same thing, sideways consolidation, back above here, back below here. I really don't know how much more to clear to make that. It's about as simple as it gets, to be quite honest. You're waiting for breaks up here and breaks down here for your trades if that's what you choose to do with it. Same thing here on the daily. These all look like that same consolidation. We're just waiting for a break one way or the other to make our move on that. On to the FAZ. Z is going to give us, of course, the opposite look. Here you have a nice flat line here and a flat line here. Here's the caveat. Now, with the gap up and the move down in the markets on the FAS, you get the gap down and the move up for the FAZ. Okay, so we gap down, we move back up. this is setting itself up pretty well too, but I'll tell you, I would probably extend this range a little bit. If you want to cheat below the 200 here, that's fine. I don't have any problem with that. You want to guard that one a little bit more. Really, the play is if fear comes back into the markets, guess what? It's back above here. If we see the complacency come pouring in, then we're watching closely for breaks, and I'm going to put it down in this range. I think this 25 range is where you need to be watching for your trade to the short side if you really want to be on the most cautious edge. From a daily, that same thing fits well. Those same numbers fit well with here as well. Watching closely then the 50-day moving average at this point. If you've been following this break here was beautiful, but now it might be time for a pullback, and in that case, it's anybody's guess how low we will drop. Maybe we hit the 50 and stop, but 22.50 is very much in the sights as well at this point. That takes us back to the beginning of the video, and really, like I said, it's pretty clear what we've got here coming into tomorrow's trading. Last week, you can see the major dip to the downside followed by the major shove to the upside. The bears and the bulls are absolutely duking it out down here. They're really fighting with one another. So you can make a call on long or short or however you want to trade this thing. Just keep in mind that this sideways action always tells me that there's a real struggle for control down here. The bulls don't want it to necessarily go much lower, or they feel it's a good value down here. The bears are like, no, it's not. And they're still looking to sell off. They're still looking to push it down. They're still looking to make some money to the downside on this thing. And right now, it's still anybody's call. I think we are balanced on the precipice of a potential market direction, though. And the levels I've given you today, I think can potentially mark a longer term move one way or the other. We break up and it's more bullish, I think, for a while. Down, more bearish for a while. I think it just gets to be about that simple. We're into that, what I think could be more or less kind of a final consolidation before we see a break that lasts longer than a day before it reverses and heads the other direction. If you're frustrated, I understand it, but I think we're close to getting a multi-day move that'll go one way or the other for, maybe a week at a time or at least a few days at a time, so hang on to it. All right, you like the videos? Sign up for the newsletter. It's $28 a month. That's $1 a day, guys. It's not even basically a coffee a day. So, and the videos come out every day except for Saturday. Lots of good information in there. Tons more lines, a lot more in depth, a lot more deep into what I'm looking at, where I'm looking for my entries, stops, exits, those type of things. I give you a lot of advice. I do a lot of things where all I do is just say, okay, today was slow, so we're just gonna talk today. And sometimes I'll just give a lot of good mentoring advice or a lot of good trading advice for you to follow. So even over and beyond what you see here with charts and whatnot, that newsletter will a lot of times give you just a lot of good basic advice to use within your own trading from my perspective. Then of course the major part being the mentoring. You really want to get a handle on how to handle this. Let me tell you, it's really pretty clear. When the market's going up, throw a dart, go long, make some money. When the market's going down, throw a dart, go short, make some money. That's usually how that works. And it leaves a lot of people thinking, hey, I got this. Okay, I can do this. I'm all right. I'm good. I'm doing really well. And then all of a sudden we get into the real trading world where things don't go up and they don't go down and they go sideways like what we've seen over the past week or so. This is where people get their head handed to them. They're in and then they're out. And they're out and they're sitting. Then they're like, oh, I should have took that. And then it didn't. Oh, if I'd have just took that trade. Then they get in and then they get stopped out. And they're like, oh, I shouldn't have got in then. I should have got in before. And it's frustrating. And it'll wear on your emotions. It'll absolutely eat you up. You'll lose sleep. You can't focus, especially if you have a regular another job. It's hard to try to trade and focus on your job at the same time. Believe me, I tried, and it's not easy. I had a real passion for trading, and when I worked, when I worked at other jobs, it was tough for me to focus on what my day job was without poking or peeking at the markets on a regular basis. So the mentoring will help it immensely with the real trading days, which is most of the time we're headed sideways. You go back and look at any chart, and you'll see that as a general rule, we don't typically go up for days at a time. Look at this. We've had a beautiful run to the downside, but look at the chop in through here. Look at the chop we're seeing here. Look at the chop here, here, way up here. It was up and down. This is a daily, so we're talking weeks at a time here in some of this stuff. Chops here and here and here. What do you do during that time? How do you play it? Where's your entries? Long, short, stops, exits, entrances, target prices? What am I even looking at? How do I know where it's going to go next? How do I draw my lines? I can answer all of those questions for you. They're all taken care of in the mentoring course that I offer. And it's by far, the best value I've got. It allows you to then take that education and go out and make money for the rest of your life, basically. And you've got something to use for your family's finances, for your own finances. I say this sometimes, and I haven't said it in a while, but I'm absolutely amazed at how much people love money. But they take this, they make this money. They go to work every day, and they work overtime, and they work holidays just to get time and a half, and they take this money. And what do they do with it? They just hand it off to a stranger and go, "Here, invest it for me. You just do something with it. I don't know what you're going to do. Just do something." Oh, well, all right. Whatever you say, bud. And they put it into some fund, and the next thing you know, the market's down 300, 500, 600, 1,000 points, and you're like, "Oh, I'm falling apart here. How come you're not doing anything with it?" And the guy's like, "Didn't know I was supposed to. Didn't hear from you. You didn't call. I'm kind of trying to make a living here, too, by calling other people to give me their money, too, that I don't know them, just like you." You know what I mean? Why not do it yourself? If money is that important, figure out how to handle it yourself. At least have a ballpark. It's okay to stay with whoever your 401k guy is. I'm not saying, take your money out and manage it on your own, throw it into a trading account. I'm not saying that at all. But wouldn't it be nice to be able to look at a chart and say, "God, this is not the fun for me to be in right now." Call up your guy and say, "Hey, get me out of this, put me into this instead. This is where I need to be." Or get me into cash. This is the right time. It's basically, financial financial, what do you want, insurance, I guess. It helps you kind of better make a more well-informed, how about that? It allows you to make a more well-informed decision about your finances, whether or not you day trade or not, or swing trade, or trade at all. I don't care. The point is, it helps you in all aspects of your life. So anyway, write me about it. Let me know. Maybe it's a fit for you, and we'll talk about it. We'll see if there's a match there. Otherwise, guys, we'll see you later on. Have a great week, and we'll see you. I'll really try again on Thursday. See you then. Bye.